Hello friends, welcome to the September edition of Monthly Viewpoints. Global equity markets continued their rally to all-time highs in August. In India too, Nifty has crossed 17,000 levels and is at all-time highs. From a longer-term perspective, India's larger economy with the nominal GDP crossing $3 trillion and the higher per capita income, which has crossed $2,000, has resulted in higher revenues and profits for Indian companies, leading to market cap reaching $3.4 trillion. Now, India's market cap to GDP currently stands at 110% versus a long-term average of 80%. The rise in India's market cap and the market cap to GDP ratio is in line with the trend seen in other countries. For example, in the US, the market cap to GDP ratio currently stands at 230% compared to 160% over the past 2 years. Now, India's economy has recovered quickly from the second COVID wave, and the impact of any third wave is also expected to be much lower than in the first two waves. At the same time, consumption, investment, and exports are all expected to pick up over the next few years. Fiscal and monetary policy remain supportive, and the reforms that are being implemented should also have a multiplier effect on growth. Hence, India's real GDP growth should go back to its trend line of 6.5% to 7% by FY23. This would also lead to a revival in corporate profits, and Nifty earnings growth is projected to normalize to around 15% by FY23. Going forward, India's market capitalization can grow faster than GDP, driven by four factors. First is a larger economy. Second is a larger share of the formal economy. Third is a larger share of Indian companies in the economy. And the last, listing of new companies. Hence, even as India's nominal GDP can rise to about $5 trillion over the next 5 or 6 years, the market cap itself can rise to between $5 and $6 trillion in the same period. This implies a CAGR return of between 10 to 15% for Indian equity investors, which is reasonably attractive given that we would likely remain in a low interest rate environment for the next few years. Now, India's high valuations currently may provide some near-term headwinds to rapid growth in the market capitalization. However, it is less relevant in the context of likely strong economic and earnings growth over the next several years. Given this context, we are positive on 5 themes, namely private and corporate banks, low-ticket consumer discretionary, the shift from unorganized to organized, industrials and infra, and technology and digital. We provide a basket of funds for investors to choose from. Thank you and happy investing.